Today is nothing short of a big day as it kicks off the first of the major catalysts. We're going to go over those in this video and also take a brief look at the market to see how they're positioning themselves in light of all the major events that we have coming up. And I know some of you have been missing the dad jokes, so I was trying to think of a pun about cows, but then my wife said, as I was talking to her about it, she goes, "A cow pun? How dare you?" All right, let's push that aside. We're going to go to the calendar. We're going to take a look at the charts. Let me kick this up here for you. So from Trading Economics, no sponsorship, of course, just a place that I like to go because it brings all the stuff together for us in one place. Right here, 10 a.m., the JOLTS job openings is what we're looking at. Now, the thing is, right now, 7.48 is what's expected, and I don't know that we're going to see things show up in the labor market yet, but we'll still keep our eyes open that if something should happen, if this number falls significantly lower from where it's at right now, especially if it goes down under 7 million, to me, I think that's going to be something that's going to be pretty darn alarming. And I'm not saying that's going to happen this month, but it's something that we want to watch for, because if we go here into the charts on this thing, there we go, click on the 10-year view of it, going all the way back to 2015, you can see that we're pretty much still on trend. So yeah, we dipped down below down there, and then in between here we rose up above. But if you kind of look from this part right here and extend a line out this way, we're on trend roughly speaking. But if we start to dip below what we had in September 2024, so this past September that we had when we were worried about triggering the SOM rule and everything, and the market started sweating the election pretty hard and all that kind of stuff. Plus, if you look back over here, when we had about the 6.7 million job openings that we have, so this is thousands or millions that we're looking at for this back in 2019, if we start to fall off of that, the further we press down below 7 million, that's when the real alarm, in my opinion, is going to start coming in from JOLTS. So that's what I'm looking for. So around 7.5 million, good, a little bit soft from that, probably not so bad. Getting down to the low sevens or even breaking down below 7, that's where that pain's going to come in. So if you see those numbers, expect the market not to take that well at all. It's going to be pretty, in my opinion, at least initially destabilizing, because it could signal recessionary fears. So if we see something around this number, around that 7.48 million, we're probably in okay shape. As long as we stay away from the low 7s, as long as we stay away from anything in the 6s, we're definitely still all right. Coming into the high 7s, that's where the market's really going to love seeing those high numbers come in. So 7.5-ish or higher, especially ticking on to 8 million, that's where that trend upward continues for those number of job openings. So that's what to expect there as we watch it. And then if we move forward into tomorrow, 8:30 a.m., that's that GDP that I keep talking about. And I'm telling you, let's look at the consensus estimate right now, 0.4%. So if we come in roughly positive for this, we should be all right. The closer we are to 1%, I should say, the higher we go into those positive numbers, the better the market's going to absolutely love it. So we want to be watchful for that positive numbers, especially if we start hitting 1% plus. Beyond that, that's where the market's really going to absolutely enjoy, because they're going to say no recession yet, woohoo, and then party on, Wayne, party on, Garth, for those of you who are my 90s friends out there. So for GDP coming out tomorrow, absolutely huge. Don't forget that the Atlanta Fed GDP Nowcast also puts out its initial GDP Q2 number tomorrow as well. So we're going to be watchful for that. And we get some other information along with that. Here you can also see personal income and outlays coming out for us on Wednesday as well, and that includes PCE, so inflation numbers. We definitely want to see those continue to be subdued, but still positive. So we don't want to see the negative numbers, because that could be that we're starting to see deflationary pressures because we have a recession on our hands. So we'd want to see numbers that are very, very small, positive numbers, close to zero, but still on the positive side of things, that we still have disinflationary pressures instead, where we stay near that zero level, but just above it. So that's what we're looking for there on Thursday. ISM manufacturing is going to be huge for us. Don't forget about initial jobless claims that comes out at 8:30, especially in light of whatever comes out for JOLTS on Tuesday. And then that, of course, can set us up for non-farm payrolls and unemployment on Friday, May the 2nd. We're going to be watchful for that, 4.2%. And let me just tell you, the thing that we're looking for unemployment rate, just to go in here for a minute, and we'll click on this, and we can actually see it here. You can see the peaks on this. 4 different months hitting 4.2% so far for unemployment. So the number that comes out, as long as we don't go up above 4.2%, if we see 4.3% or more, the market's probably going to hate that. 4.3% is going to be a new recent peak for us for unemployment. And we haven't seen that. I think the last time we saw it was July of 2017 and not since that point in time. So they're going to say if 4.3 comes in, they're going to say the highest number that we've seen for unemployment since July 2017. So we want to pay attention to that as well. 4.2, probably okay because that's steady. Still pretty low. 4.1, the market's probably going to rally pretty hard off of that. 4.3 or higher, the market's probably going to experience some downward pressure. So it's just some things that you want to pay attention to. Non-farm payrolls, consensus estimate coming in pretty darn low for this month here, 135,000. And so if you look to see what that trend is showing us so far, you can see that there's some decent volatility to this number that's not necessarily all that stable. We want to watch to see that we're not seeing numbers below February or January's numbers. And it right now expected to come in pretty darn soft. So around where my cursor is right now is what we're looking at. Let me zoom in, show you a little bit more, just over halfway up this bar. There we go. Right there, about 138,000, I think it said. So we want to see those numbers come in. The stronger, the better. High 100,000s into the 200,000s. Again, that's upward pressure for the markets. I think that the unemployment rate is going to be the bigger of those two numbers. But again, it all depends. It's very nuanced as to whatever comes out for us. So we have some major catalysts coming up. I wouldn't be surprised to see the markets experience a little bit of either just plain on volatility today, or even if we see some red going into the close today, setting up for, a real nail biter in terms of what exactly could happen for GDP. Wherever the market stops is going to end us in a really interesting situation like it did yesterday at the market close. The pre-market hours this morning, last I looked, and we'll look at the charts together, not too far off the close from yesterday. So let's put that up there for you, and we'll talk through that, and then we'll wrap up this video for you, put a bow in it. By the way, if you guys want to see my analyses for the markets, want to see my buys and sells, you can come on over, join me and the other panel experts over at the Discord. We have a joint Discord with thousands of members. You guys can be part of it too. And I'll tell you what, the products and services, especially if you use the earner tier, are pretty much endless, including the bread bot, which can tell you when those big moves are coming to your favorite stocks, and then also AI tools, advanced charting tools, and you just name it, it's there for you. Click on the link in the description, at least give a read through the products and services that are offered for just over what comes out to be about $1 a day. And I promise you guys, you're going to be very impressed by what you see. So yesterday we closed just below the 50 EMA on the Qs. Need to pop up above that. I'll tell you what, there's that nail biter that we have so far. Still staying up above the 5 EMA. That's a good thing for us. For some reason, VWAP was on and shouldn't be showing up on the daily chart, but it was. So in any case, staying up above the 5 EMA on this, and once again, just very narrow. I wouldn't be surprised to see us see a little bit of selling pressure today if the markets are worried about what comes out for GDP tomorrow, or maybe it just stays near the 50-day to still be nimble and ready to move on whatever news we get. Right now, maybe it's ready to go for JOLTS for 10 a.m. After JOLTS, maybe then it sets us up for GDP. And depending on what numbers we get, especially if it's going to be a negative thing that the market's going to react very strongly to negative news, we could see a bit of a domino effect being anticipated for the markets. So moving over to SPY, and let's put up the EMAs on this one just to stay consistent. There we go. Still down below the 50-day. We'll see what the SPY brings for us. Don't forget about corporate earnings this week. They're also going to be impactful. I think the eyes are really on those economic reports, and I think the forward guidance is going to be what's really important for the companies that are reporting. So for SPY, still looking near-term bullish, but again, ready to move on anything. Same thing for IWM as well. Bitcoin spending its 5th day trying to break and sit on top of 95,118 right now. As I'm talking about it, it's actually up above that, and the momentum is actually still below overbought. So when we look at this, there's the 95,152 that is this previous peak that's also over here. Getting up above that's also going to be good. Today's the 5th day that we're trying. Maybe today's that day that Bitcoin makes that move and finally sends us on a path up to 98,451. So XRP, to give an update on that one, man, look at that resistance right here. I talked about this red block being that area of chop, the area of resistance that we have on this. And you can see just how well we've played around this support and resistance line, and now just yesterday, we tried this one out again, but we're up above the 5. The 13 may cross the 50. If we see strength in the crypto market, XRP is actually fairly well set to move between the rising RSI, the moving averages, the way that they're positioned, the fact that if we bring up the simple moving averages on here that we're above the 50, the 20, and the 200, the 20 potentially going to cross the 50, that last big old cross that we give the moving averages the faster over the slower to really set us on, to continue us on that bullish trajectory. Maybe we start to see that $3 mark start to creep in sometime in the near future for XRP. Now, 10-year treasury yields, I wanted to bring this up too in terms of the bond market, because let me take down the technicals for a moment so we can really see this. And there we go. Stretch it out for you. We are fighting with the 200-day. Even the bond market is ready to move based on whatever news we get from those economic reports. So when I talk about the volatility that we could see, the markets are setting up, ready to move either up or down. They keep on positioning us at these critical places, and it's probably going to happen that way for market close today as well. We'll see what JOLTS does to us in the meantime, but that GDP number is absolutely enormous for talking about technical recession. And so the market, with that fear, uncertainty, and doubt aspect to it, I think that it has a big part to play, and we want to be watchful for that. And again, depending on what we see, if we see signs of weakness from JOLTS, weakness from GDP, then that really puts the pressure on Friday and really sets up that domino effect. If we get bad news, bad news, bad news, bad news, then the market's probably going to be really ugly, which actually sets up the next big opportunities like we saw the last time that we drew down before the tariff suspension for 75 countries. So guys, like I said, if you want to see my market analyses, want to see my buys and sells, see the other panel experts with their analyses, their buys and sells, be a member of a community with thousands of members already, the best community they've ever had a part of, where you have trading tools, charting tools, you have different things where there's different channels for crypto, stocks, bonds, you name it. There's everything over there waiting for you already, a community there surrounding you for support as well in your pursuit of financial freedom, or maybe just adding some alpha to your portfolio. It's there waiting. Using the link down in the description, sign up for the earner tier to get unrestricted access. And if you're interested in some coursework for technical analysis, trading using technicals, especially using the breadth speed like I do, whether it's my day trading or just trading in general, and then also options, which is what I use for that alpha in my portfolio. There's coursework in the description through Stockmo Academy. Use code word doctor when you sign up. It's going to save you a ton of cash with that code word. And then also if you bundle the courses, you save a ton more. And there's just the value that's waiting there for you is absolutely incredible. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.